Hello, today is March 24th, 2014, and I'm Jeffrey Tennant. Let's talk about today's stock market. Let's talk about the mejt signals first, and then go over what other technical indicators are implying for tomorrow's trade. There was a big drop at the open. mejt said it wasn't for keeps, that prices would retrace, which they did. Later in the day, it said lower prices were coming. They haven't happened yet. They could easily come tomorrow according to the parameters of the system. We have targets of 1853.36 and 1852.21. That's not really a heck of a lot lower than today's close. Just because we have lower targets, that does not mean that we cannot print higher prices first. When we hit a new low, that completed the three-leg Fed announcement whipsaw. We had leg 1, leg 2 was truncated, it's usually longer than leg 1, and then we had leg 3, which is the longest wave of all from the point of the announcement when we undercut that low. So that pattern's been completed. That rule doesn't require prices to go any longer, but usually the direction of the first and third legs telegraphs the direction of the next major market move. That doesn't mean it has to come immediately. Right at the low, we got a buy signal based on somebody else's work. I also would like to remind people that on Friday I said this formation was negative, but it needed some confirmation. Well, we did drop, but what did we accomplish? We undercut a whole bunch of technically significant areas and lows, but we couldn't really close under any of them. Usually, if we're going down, we have lower highs and lower lows, and I don't like to see overlap like this. When I see lows that are undercut, I want the move to continue if we're going to have an impulsive move lower. That did not happen. This is a pattern which I think closely resembles one, and I think probably is one, which has a tendency to make a sharp zoom up at the end of the day. If it doesn't happen at the end of the day, it often happens at the next day's open. That means I have both higher and lower targets for the market. When that happens, the vast majority of the time we get a gap open, which is often outside of the day's range. If we were to gap under today's lows, that would certainly be compatible with the drop declining. However, so far all that's happened with today's drop is that we've played Fibonacci ping pong between the 23.6 and 78.6 lines. That typically is not the way an impulsive move starts, and I think there's a real possibility that we gap up tomorrow, perhaps strongly. If that happens, I would look for it to reverse, and it would be a good entry point for a short position. However, if that does not happen, I think the next most likely occurrence is that we gap under this low, which would deny us a reasonable entry for a short position. So once again, the system says lower prices are coming based on factors outside the system. I think we have more than a 50% chance of gapping up first and then reversing down. And if that does not happen, I look for a gap under today's low, and that's the call.